Join me as I dive deep into the world of PDD stock and challenge myself to predict what's next for its future. PDD stock, also known as Pinduoduo, is a Chinese e-commerce company that has been making waves in the financial world. Founded in 2015, PDD has quickly become one of the largest e-commerce platforms in China, boasting over 700 million active users. With its unique business model that combines social e-commerce and online shopping, PDD has managed to disrupt the traditional e-commerce landscape in China. Today, PDD stock is trading on the Nasdaq Stock Exchange, and its market cap is over $100 billion, making it one of the largest publicly traded companies in the world. When it comes to PDD stock, one of the biggest challenges it's facing right now is market volatility. The stock market can be unpredictable, and PDD's share price has seen its fair share of ups and downs in recent months. This volatility can make it difficult for investors to make informed decisions about whether to buy or sell the stock. Another challenge facing PDD stock is intense competition from other e-commerce players, such as Alibaba and JD.com. With so many players vying for market share, it can be tough for PDD to maintain its edge. Furthermore, PDD is also facing regulatory issues, such as increased scrutiny from Chinese authorities on e-commerce players. This scrutiny can lead to stricter regulations, which can impact PDD's business operations and ultimately affect its stock performance. In addition to these challenges, PDD stock is also facing pressure from declining sales growth. In its recent earnings report, PDD reported a slowdown in sales growth, which has spooked investors and led to a decline in the stock price. This slowdown in sales growth raises concerns about PDD's ability to sustain its business model in the long term. Another challenge facing PDD stock is the company's high operational costs. As PDD continues to expand its operations, its costs are increasing, which can put pressure on its profit margins. If PDD can't find ways to reduce its costs, it could impact its bottom line and ultimately affect its stock performance. Despite these challenges, PDD stock still has a lot of potential. The company's unique business model has disrupted the traditional e-commerce landscape in China, and its massive user base provides a significant opportunity for growth. With the Chinese e-commerce market expected to continue growing in the coming years, PDD is well positioned to take advantage of this trend. However, to succeed, PDD needs to address its challenges head-on and find ways to sustain its business model in the long term. Let's take a closer look at PDD's recent financial results. In its latest earnings report, PDD reported revenue growth of over 20%, which is impressive considering the current economic climate. However, as I mentioned earlier, the company's sales growth has slowed down, which is a cause for concern. PDD's operating profit margin has also declined, which could be a sign of increasing competition and rising operational costs. Despite these challenges, PDD's cash flow remains strong, which provides the company with the flexibility to invest in its business and pursue strategic growth initiatives. Market trends are also indicating that PDD stock could be due for a rebound. The Chinese e-commerce market is expected to continue growing, driven by increasing consumer spending and a growing middle class. With PDD's unique business model and massive user base, the company is well positioned to take advantage of this trend. Furthermore, PDD's valuation is relatively low compared to its peers, which could make it an attractive option for investors looking for a bargain. Expert analysis also suggests that PDD stock is undervalued, which could provide a buying opportunity for investors. Another reason to be optimistic about PDD stock is the company's recent move into the grocery market. PDD has launched a new grocery delivery service, which could be a major growth driver for the company. The grocery market is highly competitive, but PDD's unique business model and massive user base provide a significant opportunity for growth. If PDD can successfully penetrate the grocery market, it could lead to significant revenue growth and potentially drive the stock price higher. A pivotal moment for PDD stock could be the company's upcoming earnings report. With investors closely watching the company's sales growth and profit margins, a strong earnings report could provide a significant boost to the stock price. On the other hand, a weak earnings report could lead to further declines. Another pivotal moment could be the company's potential expansion into new markets. PDD has been eyeing expansion into Southeast Asia, which could provide a significant growth opportunity. If PDD can successfully expand into new markets, it could lead to significant revenue growth and drive the stock price higher. In conclusion, PDD stock is facing significant challenges, but it also has a lot of potential. The company's unique business model and massive user base provide a significant opportunity for growth, and with the Chinese e-commerce market expected to continue growing, PDD is well positioned to take advantage of this trend. Before I go, I want to hear from you. What are your thoughts on PDD stock? Do you think it's a buy, sell, or hold? Let me know in the comments below. And if you want to stay up to date with the latest financial insights and stock analysis, be sure to check out my other videos. Thanks for watching.